All right, happy Monday, January 19. Big holiday weekend. It's been busy. Guys, I'm going to go ahead and tell you we got a guest. We got Pierce with Highland Mortgage in the what we call the virtual green room hanging out. So we're going to get to him in a second. You're going to want to hear what we're talking about there because there's just kind of talking about what's expected in the new year with rates and all those things, and then just some things that we're working through out there in the market. So hang tight. But I can tell you it's been a busy weekend. We are engaged on two offers over the weekend, and we just received the third one. So I'll walk you through that. But I just want to really see if the I'm going to see if the market numbers are matching what my phone is feeling. Okay, so let's dive straight in, and then we're going to get to Pierce. But new listings 35 new listings. We'll take that all day, right? We're coming off a time last week where we had a little bit of a rush because it's like kind of right in that new year, a little bit more than I was expecting. But I like this number, especially because it's kind of coming into a holiday weekend. And I actually thought it might spike a little bit, if you remember that conversation from last week. But 35, we will take it. Pending sales, though, look at that 33. 35 to 33. You guys that watch this know that we don't get those ratios often, right? And it's January. Let me remind you of the date. And this has been a little bit of the thing that shocked me. I was talking to Maggie yesterday. We're busier than I remember in the first 2 weeks of January from last year. That's a definite. There were some listings. I'll be honest with you. I was strategically thinking about sitting off the market. We are not going anywhere because the phone is ringing and we've been active. Okay, so 33 pending sales on 35 new. We'll take that all day. I don't know that we can keep that pace, but guys, this second week of January, 33 is above our average, and you know that. Closed transactions 20, very solid, right on par. Also, price changes 40. Okay. So we went through that spike. You remember we got up into the 70s right around the holidays because everybody had the action in town. So they were making those price adjustments to kind of get in the strike zone. But let me remind you, I don't want you to be watching this a certain way and go, man, Casey said there's 33 pendings. We need to run out there or hold tight on our prices. I got to say this every time, guys. The reason and the deals that we are putting together, the sellers are negotiating the way that they should. The buyers are finding value in that negotiation. Nobody is stretching beyond their means. But if you make sense sellers, there are buyers out there. So every time I talk about we're having a little bit of a run on pending, let's not get false confidence. Let's just know that the market is responding to good value and priced appropriately. Okay. Feel like I got to clear the air with that every time. And I could go on a whole soapbox about what I'm dealing with offers and agents sending me offers without comps. But let's save that for another time because we've got Pierce here and I'm excited to get into this conversation. I'm going to flip to this screen. Pierce, morning, my friend.
Hello, Casey. How are you?
Thank for being with us, man. I'm great. We talk a lot, so it's kind of like I'm going to lead you in here. We have fluid conversations, and guys, if you haven't seen Pierce before, he's kind of our go-to for what's going on in the market out there. Does a lot of business around here, a lot of variety of products. But Pierce, I'm going to kind of hit you with this one straight away since this is the first one of the new year. But give us that first sense of you kind of watch it all fall, go into the winter, rounding into the new year. If I asked you, what are we kind of looking at? Where are your eyes if I had to ask you to make like a 26 prediction, 2026, on what you're feeling so far and what's going on with the rates, short term, maybe even guess long term, but kind of give me that gut feeling you're working with right now.
Yeah, I mean, I think interest rates have stayed about the same throughout the fourth quarter until now, but there's definitely more action going on compared to last January and February. Because, in our business, January, February, March, first quarter is kind of a little bit slower than the rest of the year. And that's just not the case right now.
Yeah.
We're getting, I've already got 4 or 5 for February, 4 or 5 for January. And it's not slowing down, which is terrific. But it's also, it could be a sign of what's coming. Because here we are, we haven't even talked about spring breaks. We haven't talked about summers. We haven't talked about anything like that. And I think a lot of people are out there, kicking tires. It really is.
Yeah. Yeah. We have not been shy on, like, some products are still not acting like others, but we've not been shy on visits and showings. I think now all of a sudden we're seeing people move forward. Is there anything out there? Are you feeling anything on your end on, why people might be moving forward right now versus maybe more so than they were doing mid-fall, let's say?
Yeah, I think that people know that real estate's a good investment if they're buying a second home or an investment property, because it's not interest rate driven, because the interest rates are the same. So it's not an interest rate driven market. I think a lot of the big, beautiful bill at the beginning of last year is starting to actually make a lot more sense for people.
Yeah.
That with the tax incentives and everything, because like December was slammed because people were trying to get it for 2025.
Yeah.
So I think with the big, beautiful bill, talk to your CPA about the benefits of buying investment and buying second homes. And just to clarify, because I get this question all the time, you can rent out a second home.
Mhm.
So you have to stay in it per the IRS for 2 weeks, but you can rent a second home.
Yeah.
So we get that question all the time, like, hey, is it an investment property or rental or second home? And most of the time people are like, well, it's an investment property and it's their first house down here.
Yeah.
But, and then I ask them, like, how many times are you going to go per year? And they're like, well, we'll probably go 4 or 5 weeks.
Yeah.
Well, that first one is a second home.
Yeah.
So that's a better.
That's an important, and I appreciate you bringing that forward.
Yeah.
I think that's often overlooked. And I think it's often overlooked in the agent arena too, when they're kind of talking, when that comes up, because they treat it like second home definition in most people's eyes does not include any kind of rental concept, right? Like they don't.
Here's the other thing about a second home. A second home is not your second number 2 house. So you can have a second home in the mountains and you can have a second home at the beach. So it's just has to be vacation really in nature. And you have to be able to explain why you're buying it.
So there's no third and fourth home classification. It's either
they're just vacation. Think of a second home as a vacation home.
Yeah. Makes total sense. So you're kind of you were alluding to a second ago, I think, in the cost segregation world on what we were from a CPA standpoint, from the big beautiful bill, the depreciation. I think that there were a couple of instances. I received an offer from someone in December that made an offer on a listing. My seller didn't want to do it, but after January 1, for what they were doing, it just didn't make sense anymore. It was like that's what happens in December. But man, that big beautiful bill has been a spur, and I think I agree with you. I need to bring that forward a little bit more. I need to get not only you, but like there are people out there that specifically deal with that, on a daily basis, and from the CPA side, that's been a game changer for a lot of people. Don't you agree? I mean, we talked about it, but I mean, it played out the way that we thought it might.
And people won't see the benefits of it until this year. So because those tax returns will be filed. So it's going to be a huge game changer for us, but it's also going to be a game changer for buying and selling real estate. So buyers and sellers but they need to know that going into it, because the amount of people that I talk to that don't understand it because they don't live in this area, they didn't even know that they could do it.
Yeah.
So they're leaving a lot of money on the table because they're buying an investment property because of a 1031 exchange.
Yeah.
And then they didn't know about the cost segregation. They knew about, a lot of times about the depreciation, but it's a game changer. I mean, it really is. And it's a lot of money to leave on the table if you don't do it.
Yeah. And that's, it's just going to be, I think this year it's going to get more in play. It's going to be very common knowledge because I'm seeing a lot more push out there on the education. And you're right. You're going to have third-party stories from friends sitting around having cocktails showing what it did to their tax bill. And a lot of times that's where, it starts, you're out playing golf and you start hearing somebody talk about where they got their new clubs from, right? Like that's what happens with that. So you kind of alluded to something. So let me ask you this. Another thing I was working with a client on this week, we were making an offer and we were talking about cash versus finance. And we're a very cash heavy area. I think some people are shocked with the amount of cash that floats around down here, and maybe not necessarily the entire purchase, but the liquidity of what gets put down, but also people having options, to do that. But man, this seems so fundamental, but man, help me stress how important getting pre-qualified up front is in our marketplace.
If I was going through this process as a mortgage person, knowing what we have down here, I would have all my ducks in a row before I go look. I would be like, have the loan application filled out, make sure credit's been pulled, have a 90-day plan of action to know that you can go and not have a finance contingency in your contract if it comes to that. Because the number one competition for me and the number one competition for anybody buying down here is cash buyers.
Yeah.
And if, it may be a little bit less than it was a couple of years ago, but I would venture to say 40% is cash. Yes. And they don't have contingencies in the contract. And so they're going to, a seller is going to take a cash offer over any one of them with financing.
Yeah.
Now, an appraisal contingency can be with cash or without cash. So that's not a big deal.
Yeah.
But to have that certainty that you're done. The other thing that happens, when people call us about interest rates, I don't know what the interest rate is unless I know your credit score.
Right.
So if you have a 700 credit score compared to a 780 credit score, the rates are different.
Right.
The down payment's different.
Yeah.
So it's all different. So mortgage people can't talk to you about exactly what your rate is until I know exactly what the profile looks like.
Yeah.
And so many people that buy here that are self-employed, you gotta be able to go through those tax returns to figure out, okay, how long is this going to take? Because if you miss out on the deal because somebody wants to close in 3 weeks, but you have multiple companies and multiple partnerships and multiple tax returns, and it takes time. It really does.
Yeah, I think that's very common when people are calling me and they want to write an offer on something, and I maybe do not have the relationship with the mortgage person that they're working with. They really don't have a concept of how long it might take, and that can be a weakness in the offer, no doubt. Because in buffer land, that just kind of arbitrarily just throws out like 40 days or something, 45 days. And to your point, like if you're locked in with somebody that's 3 to 4 weeks on a cash closing, just clearing inspection, you're behind the 8 ball already. So to your point, like knowing how long it'll take based on what you've done up front is a huge piece. I do want to touch on this before I forget. You nailed something that I worked on this week where, worked through a deal where it's going to be cash, or maybe their bank is just handing them the money. Does that make sense? Like it's just one of those deals, right? But they were okay with going cash because they were super solid. But the backup plan was we introduced an appraisal contingency. So we were cash with an appraisal contingency, and it was really the best of both worlds.
Correct.
Because the seller still treated it like cash, because on the appraisal contingency, it didn't have to do with the purchaser. It had to do with the property, right? So sellers can get way more okay dealing with the confidence they have in the value of the home than they can worrying if Johnny just bought a Corvette and he's not going to be able to get approved for the loan, right? That's so it's like a way to balance so the buyer feels secure, but the seller also feels confident. Is that what you feel?
Oh, 100%. And back to that appraisal. So being that we're local, so I've got on our panel, our appraisal panel is really good. And one bit of advice I'd give to people buying from out of town is use a local person. The amount of times that I get a phone call saying, hey, they were using some guy out of XYZ city and didn't know that it was a non-warrantable condo, or didn't know about flood zones, or didn't know, and me and you had that Cobra zone issue.
Yes.
That's the perfect example of
Right.
using a local lender because we know the appraisers. The appraisers we have on our list are good. They've been vetted with the ones that the real estate agents like to use because they're professional and they know where they're coming from. And so those it's important to use a local person. It really and truly is. I know a lot of people think like, hey, they have my stuff and it's going to be easier. It's just not the case because a lot of times on these appraisals, they're coming in from Pensacola, they'll come in from Tallahassee, they'll come in from different areas, and they don't know the area. And and what ends up happening is when you have these really fast appraisal contingencies, like if it's a week, it's going to go to somebody who's desperate for the money, and then it's just it makes it really difficult.
Yeah.
So
No, you're right, man. We live in an area where you can hit a golf ball from a $700,000 house to a $10 million house. And that can get
yes,
very confusing for appraisers out there that don't know how to balance that out or know that they can't use Alice in their valuation system versus everything
correct.
else, right? So give me I mean, we're going to talk more this year. Give me so if you had a crystal ball on like rates, my gut is, here's been my feeling, and when I've talked to even my buyers and what I'm seeing in the marketplace, and a little bit of what I attribute it to is that just like the rental rates that have, I think, settled in from peak to down to what the performance was last year and what we're seeing in the pre-bookings this year. Do you think we should just expect that, hey, I think we're pretty much in the range of where these rates are going to be in 2026?
Yeah. I mean, I think that rates could potentially go down.
Yeah.
I mean, with the new Fed, with Jerome Powell going out in May and having a new Fed chair, that's going to be kind of an interesting time.
Right.
Not that that's going to mean that rates are going to go down. The other thing that ends up happening that people need to understand, when we do rate cuts, those are Fed and prime rate cuts. Those aren't mortgage rate cuts.
Right.
So mortgage rate cuts are already baked into those numbers. So if they say like there's a 90% chance of a rate cut in March, those are already in the rates like today. And then what ends up happening if they don't cut in March, then rates go up. But I think, from a rate perspective, we've been pretty consistent. We've gotten down, you could get, if you pay points, you could get into the 5s, low 6s. But again, that depends on credit score. That depends on loan to values. That depends on an ARM compared to a 30-year fixed. That depends on, different things like different loan programs. For people buying investment properties and second homes, interest rate doesn't need to be as much of a factor as getting closed on time and making sure that everything goes through. Because Nathan rate on $1 million loan I don't even think it's $100.
Right.
Right. It just isn't. It just doesn't. Now, if rates go down into the 5s, 5.5, I doubt they won't go lower than 5.5. That's not going to happen.
Okay.
And I think I've told you this before. I think I heard either 3 or 4 times in the last 50 years, rates have not been below 5.5 without a pandemic or a war.
Yeah.
So 5.5 to 6.5 is normal. That's low.
Right.
In a normal environment.
Yeah.
So, I definitely wouldn't look at buying a house based on interest rate.
Right.
It's just, it just doesn't make sense. You buy a house.
Yeah. We talk about it a lot. It's like, what would happen if Powell's out, somebody new comes in and there's pressure, and all of a sudden we hit 5, or it's gonna be a circus. You know what I mean? And so your price that you're paying for what you probably would have gotten now for that little bump in rate, it's trading even money waiting for the rate to drop in a lot of those instances, because if it gets too wild, you know what's going to happen to some of these house prices around here too.
Well, here's the problem though, is use interest rates, the drop in interest rates, use that for refinancing. Don't use it for purchasing.
Yeah.
Because if rates
Yeah.
go down, the values are going to skyrocket.
Yeah.
And then you're going to bring in a whole another group of people that are going to want to buy. And so now your pool of houses that are reasonably priced are going to go up.
Yeah.
Because
yeah. Let me ask you this before I forget. I'm sorry to interrupt a little bit there, but on your point, this came up the other day. We're kind of 5 years out from pandemic time. Is there any talk in the industry about, I don't know how many 5-year ARMs were written during that window of 20 to 21, and so we're going to have are you guys expecting that you're going to be in the refinance world from some of those ARMs that were written during that time coming up, or was it not a lot of short term during that time?
I think more people were doing the 30-year fixed, and they were getting those really low 30-year fixed. But I did hear the other day that a lot of the 3% mortgages are burning off. So like there's a specific number, and I apologize for not knowing, but there's a specific number like where it like 50% of the mortgages out there are above 6%. And so these 3% mortgages are burning off because of life experiences or selling houses or whatever.
Yeah.
Like I explain to people all the time, I know you got in at 3, but your house also went up in value by X.
Right.
So to take out $250,000 to $500,000 cash free, I don't really care what your interest rate was. If you got $500,000 tax free, if you're married,
right,
it doesn't matter.
Right.
So
interesting, man. We're going to talk a lot. You've helped a lot of people this year. I know a lot of people watching this have spoken with you, and I would urge you again. This isn't like, I don't bring Pierce on for like sales pitch. We're busy people, but what we're trying to urge you to do is just like not calling me on the way down on a Friday with a list of properties to see Saturday morning. You know what I mean? Like we need to get better about that in the mortgage world, because even still, it's just and Pierce can do it, but what we're doing is we're finding the homes and we're going through the process, and then we're kind of connecting, and we really don't know, other than playing with mortgage calculators online, where people feel like they can come in on value. And it's just so. The other thing is, people get surprised on what they can do because of the products you have. Like, guys, I'm trying to urge you, like you may have more options than you think out there. We
can close in LLCs, we can do second homes, we can do non-mortgable condos. And I'm telling you, anybody that's coming from out of state, the closing costs in Florida are different than Georgia, Alabama. So you don't have that sticker shock of some of the state stamp taxes and some of the other things. So it's real important to talk to somebody. And, the way that I kind of do it is give you a range of numbers of like, here's, 600,000, 700,000, 800,000. Here's the differences in payments. Here's the difference in interest rate. Now that the conforming loan limit's over 832,000, basically you can put 5% down on an $870,000 house if it's a primary.
Right.
That's crazy.
Amazing. It's amazing. It really is.
Yeah.
Listen, man, I appreciate your time. This is valuable as always. We're going to have a fun year. We're going to bring you back more often. I think there's going to be, like you said, the lead up to that May is going to be interesting. Our boy Jerome is in the news more so than anybody I ever remember in that in that position. So God bless him. But man, yeah, I think it's gonna be a fun year. We're out of the gate strong. I'm just like, I think I'm gonna share your side of it. I did not expect the phone to be. I was planning to be a little bit more caught up on back end stuff in January getting ready for spring, and we find ourselves running all over the place. So that's all I can judge it by. I don't look at metrics online. I judge it by the phone, and that's my best read. And we're active. So
and the people in our industry are saying the same thing. It's not just me. I mean, it's it's busy, and that's great. But spring break's here in 6 weeks.
Man, it's crazy.
So it's coming.
Pierce, appreciate you.
Thanks, Casey.
Have a great week. We'll talk to you soon. All right. Thanks, everybody.